Do corporations need to have employees? The answer might surprise you. Despite what many business owners believe, there is no legal requirement for a corporation to hire employees. In fact, many corporations operate without any employees at all. A corporation is a legal entity that can be formed and operated by a single person. The number of employees a corporation has depends entirely on its size, business model, and operational needs. States typically allow a corporation to be formed with just one director, shareholder, and officer, all of whom can be the same person. When it comes to S corporations, which have made a special tax election with the IRS, the rules are similar. S corporations are considered pass-through entities, meaning corporate profits are taxed on shareholders' personal returns rather than at the corporate level. While S corporations can hire employees, they are not required to do so. If an S corporation does hire employees, it becomes subject to various employment-related taxes and payments. These include contributions for unemployment insurance, FICA taxes for Medicare and Social Security, and withholding income taxes from employee wages. Interestingly, shareholders who perform work within an S corporation can be treated as employees for tax purposes. In these situations, any dividends given to the shareholder employee would count as income and be subject to taxation. Some S corporations split compensation between salary and dividends to reduce tax burden, but the IRS requires that the salary portion reasonably compensates the person for their work. Contrary to common belief, a corporation can be legally formed and maintained with 0 employees. In most states, a single individual can serve as the sole director, shareholder, and officer. However, if workers are hired, they must be appropriately classified as either employees or independent contractors, each with different tax and reporting obligations. While corporations aren't required to pay salaries, there are important considerations. If your corporation is conducting business, the IRS requires your business to have a representative that exercises the company's rights. This person must receive compensation for their work, which would count as a salary and make them an employee. The IRS is particularly concerned with ensuring it receives all required payroll taxes. This is where the 60-40 rule comes into play. If owners run a corporation and receive dividends instead of a normal salary, the IRS considers 40% of this money a dividend and the remaining 60% a salary, ensuring some payroll taxes are collected. The number of employees a corporation has varies, widely based on industry, size, and business goals. Solo corporations often have 0 employees with the owner fulfilling all roles. Small businesses might have 1 to 10 employees handling administrative or operational tasks. Mid-size corporations typically employ 10 to 250 people across structured departments, while large corporations can have hundreds or thousands of employees spanning multiple locations. When determining how many employees a corporation has, it's important to understand how the IRS and state agencies define employee. The control test is a key factor. If the corporation controls how, when, and where the person works, that person is likely an employee. The IRS also scrutinizes shareholder employees who take large dividends but little or no salary, enforcing a reasonable compensation standard. Corporations may engage different types of workers, each classified differently. These include full-time employees working 30-plus hours per week with benefits, part-time employees working fewer hours with limited benefits, temporary employees hired for specific projects, independent contractors providing services under contract, and shareholder employees who both own and work for the business. For tracking and reporting purposes, corporations must file IRS Form W-3 and distribute W-2s annually, summarizing employee wages and taxes. States may require quarterly reports on employee headcounts for unemployment insurance purposes. Public databases, company websites, and data aggregators may also provide information about corporate employee numbers. In summary, corporations are not legally required to have employees and can be operated by a single person. However, if a corporation does have workers, proper classification and compliance with tax regulations are essential. The number of employees a corporation has ultimately depends on its operational needs rather than any legal mandate.